Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, you got to be careful with January. We got some data that's going to show you guys with pretty consistent performance why January is likely to be a red month, even amongst all this bullishness. You're not going to want to miss this video. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Okay, Bob, show us the data.
Yeah, we'll throw the chart up. I'll talk through it as we do this. This won't be a particularly long podcast because when the data is clear, we don't have to yak about it. In the last 25 years, the 8-year cycle going into a presidential election has proven January and February are consistently red. Now, if they're right about the first 2 weeks of January being kind of a blow off top here, it's going to make mid-January to end of February very, 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 very negative. I just want to throw a hat tip out to Kyle, one of our customers. He's the one that threw this in the room for us, and I'm stealing it for the podcast because it's really important to see. And in fact, some months are even March is negative. So, my view, Phil, it's always been sell on Martin Luther King Day and the market will rise with Easter. And so that's kind of where I'm thinking right now. And I'm placing my first energy put trades on to protect my portfolio going into late January into March, because I think it's going to be a sell everything market. What do you say?
Yeah, this every 8 years is pretty spot on. And on top of that, too, when the market is up over 10% year to date in the preceding year, the following January, so in this case, January 2024 next month, is without fail negative. So even if it wasn't the 8 presidential election cycle year, you still have that stat too on top of it. And then you also have the flows, as we talked about, the derivative flows going into OPEX in January. And I think that latter part of January is really where things can get rocky. And who knows, you may even see some front running of that where we see maybe some weakness ahead of OPEX, not just that we get to OPEX and then it's weak. So I think we got some tricky markets ahead of us. I think the easy trade obviously has been long and everybody's been levering up into this move, but I think you have multiple reasons to be careful here. And I think, I don't know if I would fight this through the first week of January, but I think after that, you might be looking at some longer term puts. And I haven't really said that on the broadcast recently, but I think that's something where you could go out a couple of months on puts. And I think that'd be decent protection at this point, given the run up and given the numbers that we're seeing coming into January.
Yeah, when we get a little closer to the 15th of January, I'll share a trade that I'm going to put on. It's a ratio trade where you keep your loss pretty reasonable, but you really, really can outperform if you get a big move. And so it's a really good trade. And the other thing too, Phil, correct me if I'm wrong, it looks like, the Grinch was positive, so which gives also negative connotation for 2024. So a lot of stuff's lining up. And we also have a situation where January OPEX, when they close those calls off or those sold puts off at OPEX, if they don't put on the same amount for February and March, you get a natural depression or deflation because the dealers don't have to be so long to protect their position. They're able to take off those long trades, and that naturally is going to bring the market down too. So it's going to be really interesting here to watch, guys. We're basking in the glow of the first week here, but like I said, from January 20th, we showed you that VIX chart too every other year. So too many things are lining up. All the planets are lining up, and it's going to create a gravitational pull. You got a VXX, vol pop, you got the 10% thing, you got the OPEX hangover, and now you have the 8-year effect. And at the same time, the Fed is struggling now with Janet Yellen having to start going out on the curve versus just keep doing T-bills. And we're getting a lot of pressure building up, Phil.
Yeah, and the other thing too, Bob, is liquidity has finally started to shift downwards. And if we can switch to our Fed liquidity chart, you guys can get this tool over at tradegenius.co. But this is the Fed net liquidity package and also gives you signals as to when the flows are turning positive or negative. Well, we're just getting a negative warning here right at the top of this move. And what that's telling us is that the flows, now normally what's been happening, primarily what's been driving this is the reverse repo has been drained. And you've been hearing that a lot, that the reverse repo is draining and it's going to be, they're going to be out of money at the rate they're going by March or so. But something happened last week and reverse repo balances started to build, which when those are building, they're not putting money to work in the markets. They're putting money to work at the Fed lending window and they're getting that return on their money there. So they may be looking at a situation where, okay, they've ridden this move all the way up here now back to previous all-time highs. The numbers, under the hood don't look great going forward into for the first half of 2024. Let's start exiting out and putting that money and parking that money at the overnight repo window. So as a result, last week, we saw a large reduction. Now we've seen these reductions before, but then they've kind of rebounded. But this time we're seeing a follow through now, so much so that this risk off signal is all of a sudden appearing. And that wasn't even remotely the case last week, but it's just not come up at all. It's just been falling off a cliff. So, these are important to catch these, especially when they're happening toward the highs of the move. And when we get those, we want to be very careful, especially too, the fair value has really not gotten back down ever since that debt ceiling raise. They've been, it's been a levered T-bill market basically. And so, this implies we got about 800 points of air in this market that can come out before we even get back to what's been fair value since the all-time highs, basically, relative to the net liquidity that's been in the system. So you can see the market's been following net liquidity pretty well, but we're starting to get a divergence here. It's falling off. The market's kind of just up here in this holiday drift that we get at the end of the year, especially when we have a positive year like we did for 2023. Probably going to see some of that into the first week of January. But after that, you got to be careful, especially if this keeps rolling off. Sooner or later, the market will catch down to it, similar to what we saw back here. If you guys remember, this was August. We peaked out and we even had a video said, sell signal here. We had that big bearish engulfing candle and then we rolled off and you notice liquidity was falling off that whole time. So we got to watch for something like that here as well again. And I think that's going to segue into, like we've been talking about, a pretty red January going forward.
Yeah, and Phil, when we put these trade on, usually it takes kind of a week to manifest. I think it's prudent for people to start layering puts in for February, go out of the money or put a ratio trade on. And like I said, we're going to show you that trade here when we get a little closer to the 12th of January. But the market could surprise us at any point. And, you got everybody leaning really bullish. The Santa week, this was not that intense, right? So everybody's anticipating now the flows of January, and then it's going to end. So that's all I got, Phil. All
right, guys, let us know your thoughts. You agree with us on a red January? Please post your comments below. Thanks, as always, for watching. Please hit like and subscribe. It's really helped out the channel. We look forward to helping you guys navigate these markets in 2024. We'll see you guys on the next video. Take care.
Trade Genius.